Tell us about the volumes, because yesterday we saw just over 400 million being traded.
Yes, good evening, Eleni. Thank you for having me. Yes, we've seen a mild shed of points from the index, 10 points down recorded today. We had a bigger margin the other day, 39 points down. But the sentiments are for most dealers of the investment banks is that this trend will not persist for long, and maybe come tomorrow and maybe come Monday, we should see the market pick up. Turnover also dropped marginally, 390 million recorded today as opposed to 345 yesterday. So looking tomorrow, I think the market should pick up and it should grow steadily as we come into the new week.
Standard Chartered out with results today and also announced that its rights issue has been approved. They are looking to raise some money on the market, and we know that they posted a 21% jump in first half pre-tax profit. Your view on this company?
This company is very stable. It's one of the best banks, does well. The results were really good. We must remember that it recorded the highest profit margin for the end year results released 2009 December. Recording 42% up, and with these half-year results released, it's also expected to do much better in the third quarter. The rights issue are underway. They're offering it at a price of 165 shillings per right. I think that is a fair discount considering that the shares traded between the 270, 300 shilling mark. So looking forward, I think Standard Chartered's prospects are good, and for any investor getting into the market, it may be a counter to consider.
It's quite interesting. I mean, looking at the rights issue scenario that is playing out in Kenya, we know that Kenya Commercial Bank, they posted a rights issue, and unfortunately it wasn't fully subscribed. We're sitting at around 82.5%. But we did talk a little earlier, Robert, and you said that it was only around 72% subscribed. How so, given the fact that they were looking to raise about 15 billion shillings and they came through and raised 12.5 billion?
Well, really, by all standards, they said it was a success because the initial target was to get 50% uptake of the rights. They had 71%, which is equivalent to about 10.8 billion shillings worth of shares, plus the additional which were taken up, which comes to about 2.4 billion, which makes it 82% uptake. So I think by all means it's a success for the bank, and now I think we're looking to see how it will be spent. And most of it, I think, will go into increasing their potential, their capital base, and their loan book.
Well, just looking at rights issues right now, it seems that many investors and market players out there have quite a bit of option because many companies, many corporates are looking to raise capital. Do you think it's going to become tougher to raise capital in the Kenyan environment, or do you think that there's enough appetite for everyone?
I think there's enough appetite, and the recently concluded KCB rights issue is testimony to that. 71%, 82% is really good, and considering also the amount of shares they are bringing to the market, close to 1 trillion. So I think the market is really good, and anyone looking to get in now better do so, because from here things will get better. We also have the Tourism Promotional Services Company having their rights issue underway in the coming 2 weeks. They're having theirs at a discounted rate of 10 shillings. I'm also looking forward to see how it will pan out. After that, we should have Standard Chartered with theirs. And even later, we have Kenya Power having their own rights issue. So I think the market is really bullish, and these companies are actually taking advantage of this to raise more capital.
It's quite interesting to note that you said things are going to get better from here onwards. Where are you expecting things to go? We've got the referendum behind us. The dust has settled. We didn't get the kick that we wanted when it came to market performance over the last couple of trading sessions. Do you think that's still to come?
Yes, it is. And we actually saw that kick last week before the referendum on the 4th. We saw the index hit new highs. Each day it recorded a new high, getting as high as 4,600 points. That is the 20-share index. And we also saw turnover recording new highs. This week has been a week of correction. We have seen progressive correction from Monday to today. We should see that continue for a few weeks. But still, the market will hit its support and continue growing. I think prospects are good. We've had a lot of foreign direct investment in the country. There's a lot of income coming in from investors. The government has also done well with is introducing the infrastructure bond. There's a lot of prospects for the country, and things should be looking good.
We spoke about Standard Chartered a little earlier. Let's look at Diamond Bank, posting an impressive first half number, and we saw that profits before tax and exceptional items increased by around 240%. That's of course compared to the same time last year. So your view on the likes of Diamond Bank, and I think the competition is becoming quite rife when it comes to the banking earnings that we've been seeing over the last while. Where would you be putting your money right now? Would you be looking at the likes of Diamond?
Yes, of course. Why not? We look at the bank itself. It's a bank which has grown well over the years. It has over 46 branches. It's in about 4 East African countries, and they're looking to have 100 branches by the end of 3 years, which is a reasonable mid-term objective. And looking also at the profits for the half-year profit, pre-tax profit up 112.5%, and the profit after tax even much higher at 123%. We see the company doing well and having a lot of prospects. And as we speak right now, in fact, of the banks that have released their H1 results, it has the highest increase in margin from Equity Bank, which had 46% up.